when we think about blitzscaling, we think about all the successes. We don't think as much about the massive amounts of failures. Let's go through like a 25 history on this, right? So like people blitzscaled in 1999. The reason was because we believed in this new economy. We believed every brick and mortar business was going to go out of business and be replaced by an internet company. Does that sound familiar to AI today?
Yeah, a little bit.
Yeah, I think
Nothing went wrong with it the first time.
I love the sarcasm. Now the crash happens in 2001. People think the internet's a fad, entrepreneurship is a fad, but that's when amazing businesses are built. The first name brands in the dot-com age were born out of that when we weren't blitzscaling.
All right, Mark, today, talking about my favorite word in business, blitzscaling. You were the first to write a book that touched on this, but I want to hear about the arguments for, arguments against, and kind of the evolution of like where blitzscaling stands today.
You're referencing the sales acceleration formula.
Yeah. Your first book.
Yeah, I think it was 11 years ago, something like that. I think the official blitzscaling book by Reid Hoffman and Chris Yee came out maybe 3 or 4 years after. The concept of blitzscaling is you have to go ridiculously fast, burn a lot of money. It's almost like this space shuttle analogy where like there's so much force needed to like get out of orbit, but once you're out of orbit, you're like there. And so like the concepts there are whoever like gets the most customers fast can then raise the big round. And when you raise the big round, you get the TechCrunch article and the Wall Street Journal article. And because of that, all the customers want to come to follow you. And because of that, the big engineers want to join your team. And because of that, you have a better product and that leads to more customers. And then that leads to the bigger Series B round. And it just like spirals on top of each other. And you have to do that to be able to like get out to orbit. I think there's a lot of validity to that. We certainly did that to some degree at HubSpot. I think what's confusing for people, one, it's not the only way to have entrepreneurial success because it depends on context. Most companies scale too early or too late. Both can. That's why I created the Revenue Leader's Guide to Scaling. It shows you exactly when to accelerate growth using my framework and templates. You'll hear from 10 plus CROs and sales leaders who've done it successfully. Stop guessing when to scale and start using data. It's free. Check out the link in the description. There are a lot of very successful businesses that were bootstrapped. Klaviyo just had a successful IPO, kind of a bootstrap business. ZoomInfo a couple of years ago had a very successful IPO, bootstrapped a business, right? So like it isn't the only way. And I think like when we think about blitzscaling, we think about all the successes. We don't think as much about the massive amounts of failures. That's, I guess, where the science of scaling comes in, is many of those failures I think were unnecessary. And so like these are not mutually exclusive works. It's not like you either believe in blitzscaling, you raise a ton of money and you try to go as fast as possible and burn and either make it or break it, like go big or go home, and you've got a 1% chance of winning. And the science of scaling is don't do that and grow slow. That's not true. The science scaling is more like, what do you need to have in place to blitzscale? Like, when are you ready to blitzscale? And when you say blitzscale, quantify that. Are we talking about like doubling revenue and burning $10 million next year? Are we talking about 50xing revenue and burning $1 billion next year? Like, where is that and how do we calculate that? So they're works that can come together.
But wouldn't someone just be like, it's just going to burn as much investment as we have to grow however much? So you could be like 50x for 10 million, but some people would be like, I'm not even worried about the first part. I'm just worried about we're burning 50 million. We're going to grow as like fast as possible, as much as possible.
I think that's how people think. And I think that's very wrong. There's a couple dimensions to this. First off, they think, okay, I'm doing a tech startup. I need to raise venture capital and blitzscale. That's just not correct. It's not appropriate for certain business ideas. There are certain business ideas that are meant to be sold to a major platform. And like, there are a lot of entrepreneurs who do blitzscale. They go out and raise a bunch of money and build a company that's worth $1 billion. And after all that dilution, they own 10%. So they make $100 million, which is awesome. And then there's a lot of people who bootstrap a business for 3 or 4 years. Maybe they raised $1 million like safe or something, so they own 90% of the company. And 3 or 4 years later, they get it to 10 or 12 million. They sell it for $150 million, which is like not a big acquisition to some platform play, and they make 120 million. It's the same thing.
Yeah.
Right? So it's just like there's this factor of risk. At the end of the day, the right answer is you have to choose the capitalization strategy that's right for your business. And then part of that will dictate your growth strategy. Okay, so there's that piece of like the contextual obsession with like the only way to build an awesome startup is to raise a bunch of money, to try to get on the front page of TechCrunch, to burn a ton of money, et cetera. That's not true. And we've just talked about a couple examples. Now, if you are going down that path, I agree with the work of Blitzscale by Chris and Reed. There is like some semblance of a first mover advantage of getting the round because you box out other people from getting the big round because they're concerned the competition's there.
It's kind of like a moat.
Yeah, there is a moat there. I will say that there is rigorous research that shows that first mover advantage is not as prevalent as you think. Google was not the first search engine. Salesforce, HubSpot were not the first cloud-based CRM. Chrome and Edge were not the first browsers. There's a longer list of third, fourth, fifth entrants that won than there is that first entrants that took it. Okay, so that's a little overplayed, so we got to be careful. Now, what's interesting about Reid Hoffman and Chrissy's work is like, it's hard to appreciate the slice of the business community you're seeing because of your background. So as an early employee at HubSpot, I think I see a lot of go-to-market tech. Reid founded LinkedIn. He sees a lot of social networks. Now, granted, he's at Greylock, I believe, and like, he's since now invested in all these amazing companies and sees a widespread of things, but like he's known for LinkedIn at his foundation. And so he sees a lot of stuff that's like network effect. And I would say if you have a network effect, there's a massive first mover advantage. There was a massive first mover advantage to LinkedIn, much more so than like other types of plays. So there might be a slight bias to the work toward the sector they sort of grew up in. But I do think it still has validity that like you can box people out. The science of scaling, I believe, complements the work because it tells you when you're ready for that blitz scale and it quantifies the blitz scale for you in terms of how fast that is. Does that make sense?
That makes sense. I guess like how is that today? Like are people aren't still like just blindly buying blitz scaling of like if I start a company, I need to blitz scale. If it's in tech, I'm blitz scaling today. Or like are you still seeing people doing that? Or like how has that evolved to like right now?
So it's a great question because it depends on the macro economy and the entrepreneur community always goes up and down. Let's go through like a 25 history on this, right? So like I wasn't an entrepreneur before like 1997. I was still in college. And I don't even think like entrepreneurship was like tiny compared to what it is today. It was because of the internet, the .com craze. Before that, my perception of entrepreneurship was just like, it wasn't accessible to everyday people. And then it became really popular. Now, people blitzscaled in 1999. The reason was because we believed in this new economy. We believed every brick and mortar business was going to go out of business and be replaced by an internet company. Does that sound familiar to AI today?
Yeah, a little bit.
I think there's like
nothing went wrong with it the first time.
I love the sarcasm. So yeah, we have to learn from that point. So certainly you had some massive blitzscaling in there and that was terrible. And I think like compared to what we know today about entrepreneurship, we didn't know what the hell we do. I mean, we had companies go public without revenue. Like it was like stupid, right? Now the crash happens in 2001. People think the internet's a fad, entrepreneurship is a fad, go back. No blitzscaling, like no venture capital, but that's when amazing businesses are built, you know, like in that next 5-6 years. I think HubSpot, Salesforce took off then. Google really became popular then. I think Workday, I think ServiceNow. The first name brands in the .com age were born out of that when we weren't blitzscaling. Okay, probably like a back to basic, like let's get to profitability faster. Let's think about unit economics. And you could, because there was less competition. Then you fast forward to like, okay, now cloud starts to take off again. Now we're into 2010, we're into 2012. Yeah, venture is enormous now. They always say like, it was just like the heyday of cloud and there was massive blitzscaling. And that leads all the way to like 2020 that we all remember. We're in COVID. We don't know how long this is gonna last. The world shuts down for 4 months. And then all of a sudden that summer we have this V-shaped recovery in tech. Like the economy goes crazy. Public companies and software that were priced at like 10x their revenue are now priced at 40x. That thing goes up for everybody. There's tons of money. Interest rates are low. Venture capital is flowing. All these startups are being priced ridiculous. And they're blitzscaling because they can, because the money's there. And they think that that's like the way you have to do it. And that's going to be a bad vintage for venture. The investments that were done in 2020, 2021, it's going to be really bad because they blitzscale.
How long of a tail is that? Like, it's going to be bad or bad decision for 5 years?
Well, it's
10
like
years
the
down the road?
venture capital vintages, which is also translated to startup vintages, cohorts. They're almost like wine. They're like, they go by a year. Oh, what? That's the 2022 vintage. That's how you talk about it, like venture capital, but with VC funds. And the vintage in 2020 is going to be terrible. And it like, you're kind of saying, how long does that last for? That's just permanent. Almost all of our companies are still alive and some are accelerating. So we just don't know if we still have a, a massive unicorn in there. But it's just like, it's always hard when normally you're paying 10 to 20x on top line revenue for the valuation. In that year when everyone's now paying 100x, it's just hard to make like a really strong return. So now you get to 2022 where everything crashes. Interest rates go up, venture capital dries up, everyone realizes that they just met a bunch of like way overpriced valuations, demand goes way down, and everyone's talking about like back to basics, efficiency. Efficiency is the name of the game. So blitzscaling goes out of flavor. So now where are we in 2025? We have like multiple economies happening at once. We have these businesses that were funded between, say, 2018 and 2022. They probably did a massive round then. They blitzscaled, so they probably burned through almost all of it. They can't raise more money because, like, it's a blitzscale, it's a messy cap table. They've already taken a lot of money. So they're operating more like rule of 40. We've had some people on the show around that. Rule of 40 means you add your profit margin plus your growth rate. And if it's 40 or above, that's a very good business in the eyes of private equity. So if you're growing 20% a year and you have a 20% profit margin, that's good. So that's how they're operating. They're trying to get to profitability. They're not blitzscaling. They're arguably at risk of going too slow and missing a window. It just depends on how strong their moat is. Then you have everybody funded since 2022 that's not AI. That looks a lot like what I'd say has been the median of venture and startups over the last 25 years. Regular price seed, regular priced A, regular burn rate, maybe burning a couple million a year, growing 100, 200, 250% a year, just like what you'd consider as the median healthy venture thing. Then you have AI. It's blitzscaling. It's blitzscaling. I mean, like you're right back to like 1999. People are paying 100x times their top line. People are going from 0 million to 5 million to 20 million. And it's an interesting time there because I think the mainstream narrative in the tech ecosystem is like, this is the new reality. And I'm trying to figure out if it is or if it's like the new economy from like, what we were saying in 1999 that all crashes. I think there's a lot of data evidence that it's still more like the new economy. I would believe it that this is the new reality of like an AI efficient startup that you go from 0 to 5 to 20 to 100, whatever the numbers are. If you looked under the hood and you saw salespeople producing like $5-10 million a year each, you saw engineers writing like a quarter's worth of code in like 3 days, which you see a little bit of that. You see like revenue per employee off the charts because of all these like really dramatic new ways to build an organization in an AI first way. You're seeing a little bit of that, but not much. The reason why it's happening is everyone's trying to figure out AI and they're testing a bunch of stuff. And so you have all this massive growth into more like test projects as opposed to like mission critical projects. And a lot of people are just like, the tools aren't working. I mean, I'm like still like, everyone's like, hey, how can I like scale my demand gen without hiring SDRs? We've been looking forever. Like it's just really difficult still. Blitzscaling comes and goes as highly in favor depending on the macro conditions. And today we're seeing a mixed economy depending on what you are. And I would say the science of scaling is always relevant. Both of them are always relevant, but I think the science of scaling is critical to decide how much risk you want to take around that blitzscale. Blitzscaling and the science of scaling are not two mutually exclusive options in terms of how to scale your business. The science of scaling tells you when you're ready to blitzscale and how fast you're ready to blitzscale. So they're both applicable. That's number one. Number two, be careful interpreting that blitzscaling is the only way to achieve entrepreneurial success. It's contextual to the type of business you're starting. We laid out some examples where they built great products and great companies and generated wealth for themselves and wealth for their employees just as much as that big IPO by not going the venture capital route and by not going the blitzscaling route. So just be careful to confuse that that's the only way to do it. And then point number three would be there is tremendous rigorous research that shows that investors and entrepreneurs overweight first mover advantage. There is first mover advantage. It is stronger in areas where there are things like network effects, like a LinkedIn, but it's just not as much as people think. There's a much longer list of those that were the ultimate winners that were the second, third, fourth entrant. So just keep that in mind as you're considering your scale pacing. So that's it for our segment today. Be sure to check out those links that I threw in the description. Good luck scaling, happy scaling.